Trading looks very easy when you see it from the outside. You open a chart, wait for a good setup, and then click buy or sell. At first glance, it feels like a smart and logical game, where being intelligent and using the right strategy should be enough to win. But anyone who has actually sat in front of a live market knows the truth. Trading is not just about charts, numbers, or indicators. It is deeply emotional. The market has a way of pulling you into extreme feelings very fast. In just a few minutes, you can go from feeling on top of the world to feeling completely defeated. One moment, you feel like a genius who finally understands the market. The next moment, you feel like a total failure who can't get anything right. This emotional ride is something every trader experiences. This is the roller coaster that all traders ride. And if you don't learn how to step off it, it will control your mind, drain your energy, and eventually push you out of trading completely. Think back to your very first big win. Remember the excitement you felt when the trade started moving in your favor. Your heart was racing. Your profit kept growing, and the adrenaline was intense. You felt proud of yourself, like you had finally figured it all out. That feeling is powerful. It makes you believe you're on the right path. It feels amazing, almost better than anything else, and it convinces you that success is finally yours. But that high doesn't last forever. Soon enough, the other side of the roller coaster shows up. The painful low. Maybe the next trade goes against you. Maybe you lose all the profit you just made. Suddenly, that strong confidence disappears. The feeling of being unstoppable quickly turns into doubt, frustration, and anger. You go from saying, "I've got this," to asking yourself, "Why do I keep messing up?" And all of that can happen in just one trading session. This constant swing between extreme happiness and deep frustration is what traps so many traders. And the most dangerous part of this roller coaster is that it feeds on your natural human instincts. As humans, we are programmed to chase pleasure and avoid pain. A winning trade feels good, so your brain wants more of it. A losing trade hurts, so your brain wants to escape that pain. Because of this, your emotions react strongly, and those reactions blur your judgment. After a big win, greed often takes control. You want to feel that high again, so you jump into trades too quickly, chasing the same excitement. After a big loss, fear and frustration step in. You want to recover the loss fast, so you revenge trade, increase your risk, or completely ignore your trading plan. In both situations, you are no longer trading the market. You are trading your emotions. This is the main reason why so many traders lose money even when they know exactly what to do. They have strategies. They understand charts. They've studied indicators, patterns, and setups. But when real money is on the line, emotions take over. Fear whispers, "What if this trade fails?" Greed shouts, "Take another trade, don't miss out." Doubt creeps in and says, "Maybe your system doesn't even work." Impatience pushes you into trades that don't match your plan at all. And before you realize what's happening, you've already ruined your own performance. This emotional roller coaster doesn't just affect your trading. It spills into your daily life. You wake up thinking about yesterday's loss, and you go to bed dreaming about tomorrow's win. Your mood follows your account balance. When you're winning, you feel happy, confident, and easy to be around. When you're losing, you become quiet, angry, and frustrated. You might snap at people who have nothing to do with your trades. This is why so many traders burn out, not just financially, but emotionally too. They give everything they have to the market, and the constant ups and downs slowly drain them until they quit. The first step to breaking this cycle is awareness. You must accept that trading will always bring emotions. There's no way around it. You are risking money, and money is connected to survival, security, and status. Of course you're going to feel something. The problem isn't having emotions. The real problem is letting those emotions control your actions. You can't stop yourself from feeling fear, greed, or excitement, but you can choose not to act on them. That's where most traders fail. They believe the goal is to remove emotions completely, but that's impossible. The real goal is to stop emotions from making decisions for you. If you think about it, this roller coaster exists because you tie your self-worth to each trade. When you win, you feel like a winner. When you lose, you feel like a loser. That kind of attachment is dangerous. Professional traders don't see wins as proof they're smart, or losses as proof they're bad. They see both as normal parts of the process. A win simply means they followed their plan and edge. A loss is just the cost of doing business. That mindset keeps them calm while others are being thrown around by emotions. Before going further, ask yourself this question. Are you struggling with fear, doubt, or trading too much? The truth is, most traders don't fail because their strategy is bad. They fail because their mindset is weak. Imagine two traders taking the same loss. The first trader feels crushed. He thinks, I can't believe I lost again. Maybe I'm not meant for this. He stares at the charts for hours, feeling angry and confused, and then jumps into another trade just to feel better. The second trader experiences the same loss but reacts differently. He says, that's just one trade. I managed my risk, and it followed my plan. Then he steps away, clears his mind, and comes back the next day ready to trade again. Both traders faced the same loss, but only one was emotionally destroyed. The difference is perspective. And that perspective comes from separating who you are from the result of any single trade. The market doesn't care about your feelings. It doesn't care if you're winning or losing. It doesn't care if you just blew an account or hit a winning streak. The market will keep moving and creating opportunities every single day. The roller coaster tricks you into believing each trade is life or death, that one win or loss decides your future. But trading is a long-term game. No single trade really matters. What matters is how you handle many trades over time. If emotions control your behavior, consistency is impossible. Your decisions will always swing between extremes. Stepping off the roller coaster means accepting losses as part of the journey. You will have bad days, bad weeks, and even bad months. But those losses do not define you. They are simply business expenses. When you stop taking losses personally, they lose their emotional power. And when you stop seeing wins as proof of your greatness, you avoid overconfidence. That balance, neither too high nor too low, is what keeps professional traders stable. But here's the hard truth. Most traders never leave the roller coaster because they don't want to. Deep down, they enjoy the highs. They love the adrenaline, the excitement, and the dream of getting rich fast. That thrill is addictive, and like all addictions, it ends with a crash. If you truly want success, you must choose between excitement and consistency. You cannot have both. The traders who survive are not chasing excitement. They are boring, disciplined, and steady. They don't ride the roller coaster. They watch others ride it while losing money. Ask yourself this. Would you rather feel excited for a few hours and lose money, or feel calm and build wealth over many years? Most people say they want wealth, but their actions show they want excitement. They want fast results, big moves, and fireworks. That's why emotional traders always give money back. Consistency is not exciting. It's boring. It's doing the same thing every day, managing risk, journaling trades, and accepting losses without drama. There are no fireworks in consistency, but there is freedom. Freedom from stress, fear, and emotional chaos. That freedom is what allows traders to stay in the game long enough to succeed. The emotional roller coaster is a trap, and most traders never escape it. But those who do stop treating trading like entertainment and start treating it like a business. They accept emotions will always exist, but they refuse to let emotions control them. They manage risk, accept uncertainty, and show up with discipline every day. That's how you step off the roller coaster and finally take control of your trading journey. To understand why escaping is so hard, you need to understand how your mind works against you. Trading doesn't just show your emotions, it amplifies them. Fear, greed, doubt, impatience, pride, and anger all rise to the surface when you trade. And once they're triggered, they take control unless you consciously stop them. At the heart of this emotional chaos is uncertainty. Every trade is a step into the unknown. No matter how good your analysis looks, there is never a guarantee. Humans don't like uncertainty. Our brains want control, patterns, and predictability. Trading challenges that, and that's why mastering your emotions is the real edge. That's why the market feels so uncomfortable for most people. It is unpredictable, and unpredictability creates anxiety. The moment you place a trade, your brain starts begging for certainty. It wants clear answers right away. Will this trade win? Will I be right? When those answers don't come instantly, your mind fills the silence with fear or hope. That's why so many traders sit in front of their screens for hours, unable to look away from a single trade. It's not because watching the price move will change anything. It's because the brain is addicted to certainty, even when certainty doesn't exist. Every small price movement feels like a signal. Every tick feels important. Every move feels personal. When the trade moves in your favor, you feel relief wash over you. Your body relaxes. When it moves against you, anxiety hits hard. Your heart races, and your thoughts spiral. That's how the roller coaster begins, not because of logic, but because of a desperate need to know what will happen next. The second force that powers this ride is attachment. Traders become emotionally attached to trades because money is never just money. It represents safety, success, confidence, and even self-worth. So when you lose money, it doesn't just feel like a financial loss. It feels personal. It feels like failure. And when you win, it doesn't just feel like progress, it feels like proof that you matter, that you're finally doing something right. This emotional attachment makes every outcome stronger. Instead of seeing a losing trade as a normal part of business, you see it as a judgment on who you are. Instead of seeing a winning trade as just one step forward, you turn it into evidence that you're becoming the trader you always dreamed of being. That attachment makes the highs feel incredible and the lows feel unbearable. Over time, you can see how damaging this becomes. After a string of wins, you start feeling unstoppable. Confidence slowly turns into overconfidence. You begin to ignore your rules. You take larger risks. You increase your position size. You jump into trades you would normally skip. Why? Because you feel untouchable. But eventually, a loss comes. And that loss doesn't just take money from your account, it hits your ego hard. Suddenly, you don't feel invincible anymore. The same mind that told you you were brilliant now tells you that you're a fraud. That sudden shift from extreme confidence to deep doubt is one of the most dangerous parts of the roller coaster. It destroys consistency. It makes you question everything. And then there's time, another powerful force in trading. Trading doesn't give you instant closure. Some trades last minutes. Others last hours or even days. During that waiting period, your emotions sit in uncertainty. And the longer the trade stays open, the stronger those emotions become. Often, waiting is more painful than the result itself. Your mind starts racing with questions. What if it reverses? What if I should close now? What if I miss a bigger move? This constant inner dialogue keeps you tense and anxious, draining your mental energy long before the trade even ends. That's why so many traders exit too early or hold trades for too long. They're not following logic, they're trying to escape the discomfort of waiting. Then comes revenge trading. This is the purest form of the roller coaster, where emotions fully take control and logic disappears. You take a loss, and instead of accepting it, you feel the urge to fight back. It feels personal, like the market did something to you. You double your position. You jump into random setups. You try to erase the pain with a quick win. But the market is not your enemy. It doesn't know you. It doesn't care about your feelings, your past losses, or your need to feel better. The market is simply moving, while you hurt yourself trying to get revenge. The sad irony is that revenge trading almost always leads to bigger losses. Those bigger losses create even stronger emotions, and the cycle spirals downward. This happens because trading doesn't just test your strategy, it tests your identity. Every decision feels personal. Every loss feels like proof that you're not good enough. But the truth is, the market isn't saying anything at all. It's just price movement created by millions of people around the world. It has no opinion. It's neutral. The only meaning it has is the meaning you give it. If you see a loss as failure, it becomes painful. If you see it as a business expense, it becomes neutral. The market doesn't change, your interpretation does. This is where discipline becomes essential. Discipline is the seatbelt on the roller coaster. It doesn't remove emotions, but it protects you from them. Without discipline, every emotional spike throws you off balance. With discipline, you still feel fear, excitement, and doubt, but you don't act on them. That's why professional traders focus less on being right and more on following their process. They expect emotions to show up. But as long as they stick to their rules, those emotions don't destroy their account. Here's the uncomfortable truth. Most traders resist discipline because it feels limiting. When emotions are screaming at them to act, rules feel like a cage. They don't want to miss out. They don't want to stop trading after a loss. They don't want to walk away when things go bad. They want freedom, the freedom to chase excitement. But that freedom always comes at the cost of consistency. The rules they resist are the same rules that would save them. Discipline feels boring in the moment, but it's the only path to long-term success. Without it, you stay trapped on the ride, swinging between joy and despair until you burn out. Over time, the roller coaster changes how you think. You start expecting losses before they happen. You sabotage good trades because you're afraid of being wrong. Or you sabotage winning trades by moving stops or taking profits too early because you're scared of losing what you have. The roller coaster trains your mind to expect extremes. So even when the market gives you good opportunities, your emotions turn them into problems. That's why traders often say, "The market is against me." But the truth is, they are fighting themselves. They are trapped in a ride they refuse to step off. The solution is not complicated. You don't need a perfect system or a secret indicator. You need to change your relationship with the market. You need to detach your identity from each trade. You need to treat trading as a process, not a test of your worth. You must accept uncertainty instead of fighting it. Accept losses as normal instead of fearing them. And commit to discipline even when your emotions are screaming at you to do the opposite. It sounds simple, but it takes daily effort. And most people don't want to do that work. They'd rather chase the highs and survive the lows than live in the calm of consistency. But if you truly want to survive in this business, you have to ask yourself some honest questions. How much longer can you keep riding this emotional roller coaster? How many trading accounts can you afford to blow? How many sleepless nights can your body handle? How many emotional breakdowns can you take before you finally give up? Because this is how the roller coaster really ends. If you don't step off by choice, it won't end in success. It ends in exhaustion, burnout, and surrender. The traders who eventually win are the ones who decide that enough is enough. They choose to break the cycle before it destroys them. They stop chasing emotional highs, and they stop being afraid of the lows. Instead, they build balance. And that balance is what separates a gambler from a professional, a loser from a survivor. Once you experience that balance, you'll never want to get back on the roller coaster again. Every trader knows what it feels like to be stuck in a loop. You make money, then you lose it. You promise yourself that this time will be different, that you won't repeat the same mistakes. But somehow, a few days later, you find yourself right back where you started. It almost feels like the market is designed to pull you into the same traps again and again, no matter how much knowledge you think you've gained. This is the emotional cycle of trading. And until a trader learns how to break free from it, they will remain stuck in a loop that slowly drains not only their money, but also their confidence, energy, and sometimes even their love for trading itself. The first thing to understand is that trading doesn't just reveal how skilled you are. It exposes your emotional weaknesses. If you are naturally fearful, trading will magnify that fear. If you are greedy, trading will bring that greed to the surface. If discipline is a problem for you, trading will punish you for it. The market is like a mirror. It reflects your mindset back to you in a way that no other profession does. In a regular job, you can still perform reasonably well even when you're stressed or distracted. But in trading, even a small emotional imbalance can lead to terrible decisions. This is why most traders fail. Not because they lack strategies, but because they cannot control their emotional roller coaster. Reaching emotional balance is not easy. It takes discipline, patience, and most importantly, detachment. Detachment doesn't mean you don't care about your trades. It means you care more about the process than the outcome. Most traders are emotionally tied to whether a trade wins or loses. They feel proud when they win and ashamed when they lose. This is dangerous because it places your emotions in the hands of the market, something you will never control. The market doesn't care about your feelings. It doesn't care about your hopes, your fears, or your expectations. It will move however it wants, whether you are in profit or deep in loss. The only thing you truly control is how you react. To break free from the cycle, traders must learn to see losses as information, not as personal failures. When you take a losing trade, instead of asking, "Why does this always happen to me?" you should ask, "What can I learn from this?" That small shift in thinking is powerful. It turns losses into lessons instead of emotional wounds. In the same way, when you take a winning trade, you must resist the urge to feel invincible. Winning does not mean you've mastered the market. It simply means probability worked in your favor this time. When you treat both wins and losses with the same emotional distance, the roller coaster starts to slow down. Another reason traders stay trapped is overexposure. Many traders spend the entire day glued to their screens, watching every candle, reacting to every small move, and letting their emotions rise and fall with price action. This constant stimulation keeps them stuck in the cycle. To break free, you must learn to step away. Sometimes, the best trade is no trade at all. Sometimes, the most profitable decision is turning off your screen and letting the market move without you. Ironically, this restraint often leads to better results because it protects you from impulsive mistakes. There's also the issue of identity. Many traders connect their self-worth to their trading results. When they make money, they feel successful. When they lose money, they feel like failures. This dangerous connection makes the roller coaster even worse, because your confidence is tied to something as unpredictable as the market. To truly step off the ride, you must separate who you are from your trading results. You are not your trades. You are not your profit and loss. You are simply the person executing a system. Your value is not defined by one trade or even a series of trades. Breaking free also requires setting clear boundaries. If you trade without rules, your emotions will take control. But when you have a structured plan, clear entries, defined risk, and planned exits, you reduce the power of emotions. Rules act like guardrails, keeping you on track when emotions try to pull you off the road. The mistake many traders make is breaking their own rules when emotions get intense. They say things like, "Just this once, I'll increase my position size," or "This trade feels too good to need a stop loss." These small decisions often grow into massive losses. That's why discipline is the strongest weapon against the emotional roller coaster. Still, no one becomes perfectly disciplined overnight. Breaking free is a gradual process. You will still feel fear. You will still feel greed. You will still experience doubt. But over time, you learn to recognize these emotions instead of obeying them. You learn to pause before clicking the button. You learn to check your plan instead of chasing a feeling. Slowly, the extreme highs and lows begin to smooth out. Trading starts to feel less like a wild ride and more like a steady journey. In the end, the emotional roller coaster never fully disappears. It's always there, waiting. The real question is whether you choose to get on it or not. Most traders climb aboard without realizing it, letting emotions control every decision. But successful traders step back. They take control of their mindset and refuse to be passengers on a ride they didn't design. They choose discipline over impulse, process over outcomes, and balance over chaos. When you finally break free from the cycle, trading stops feeling like an emotional war. It becomes what it was always meant to be, a calculated game of probabilities guided by patience, discipline, and self-control. That's when trading changes from a stressful roller coaster into a sustainable career. Trading is not just about charts, patterns, or indicators. If it were, anyone who studied technical analysis for a few weeks would be profitable forever. The real difference between success and failure is not knowledge. It's self-control when real money is on the line. The emotional roller coaster destroys more accounts than bad strategies ever will. To gain emotional freedom, you must change how you see yourself and how you see the market. For most traders, the journey begins with excitement. You place your first trades, maybe win a few, and start believing you found the path to financial freedom. Then losses appear, and emotions rush in. Fear, anger, greed, and doubt take over. Each trade starts to feel personal. You want the market to prove you're smart or punish you for being wrong. That's how traders stay trapped. They let emotions cloud their judgment and then wonder why their results are inconsistent. Emotional freedom begins when you finally accept trading for what it truly is, a game of probabilities that plays out over time, not in a single trade. The hardest part of stepping off the roller coaster is learning not to take results personally. Every loss feels like a judgment on your ability. Every win can feel like proof that you're special, like you finally have something others don't. This constant attachment to winning and losing keeps traders addicted to the emotional ride. But the truth is, trading is not a measure of who you are as a person. It's a reflection of your discipline. A skilled trader can still take a losing trade. And an undisciplined trader can still get lucky and win a trade. That's why outcomes matter far less than process. Real emotional freedom comes when you stop judging yourself by the result of one trade and start judging yourself by whether you followed your rules and respected your plan. One of the biggest steps toward emotional control is realizing that the market is never wrong. The market doesn't owe you anything. It doesn't care about your feelings, your hopes, or your dreams. It simply moves. The only things you can control are your risk and your reaction. Accepting this truth frees you from the dangerous idea that you can force the market to give you what you want. Once you understand this, you stop fighting the market and start moving with it. Instead of trying to control the market, you discipline yourself. Look at professional traders, the ones who survive year after year. They don't ride extreme emotional highs and lows like beginners do. They don't celebrate wildly after a big win, and they don't fall apart after losses. Their emotions stay steady because they know each trade is only one small part of a much bigger picture. They focus on long-term performance, not short-term results. This mindset doesn't make them emotionless. It makes them emotionally strong. They still feel disappointment when they lose and satisfaction when they win, but those feelings don't control their decisions. That's the difference between being ruled by emotions and simply recognizing them. To reach this level of freedom, you need habits that keep you grounded. This isn't about hype or motivation. It's about routines that keep your trading stable even when emotions change. A solid pre-market routine, clear risk rules, and an end-of-day review aren't just for organization. They create emotional stability. These habits keep you anchored so you don't drift into reckless behavior when emotions rise. They give you something reliable to fall back on when feelings try to take over. Patience is another major key to emotional freedom. Most traders fail because they cannot wait. They want fast results, quick profits, and instant success. But the market does not reward impatience. It punishes it. Every trader who jumps into trades without discipline is basically handing money to someone more patient. Emotional freedom comes when you stop needing immediate results and trust that consistency over time is what truly matters. This shift in thinking turns trading from a desperate chase into a calm, steady process. Accepting uncertainty is also critical. Many traders secretly crave certainty. They believe that with the right analysis, they can predict exactly what will happen. But certainty is an illusion. No strategy, indicator, or analysis can guarantee outcomes. The sooner you accept this, the freer you become. When you stop searching for certainty, you stop panicking when the market surprises you. You no longer feel betrayed when trades don't go as planned. Instead, you understand that probabilities are playing out, and your job is not to be perfect, but to be consistent. Emotional freedom also requires humility. Many traders blow accounts not because they lack skill, but because they refuse to admit they can be wrong. Ego is one of the biggest traps in trading. It pushes traders to hold losing trades too long, add to losing positions, or overtrade just to prove something. True freedom comes when you let go of the need to always be right. Winning traders don't care about being right. They care about protecting their money. If a trade goes against them, they exit. No drama, no arguments, no emotional fight. That humility is what separates consistent traders from emotional gamblers. Stepping off the roller coaster isn't about removing emotions completely. It's about mastering them. Fear will always exist. Greed will always exist. Doubt will always exist. You can't erase these feelings, but you can control how much influence they have over your actions. When you learn to pause, detach, and follow your plan instead of your emotions, the roller coaster loses control over you. Trading becomes less about emotional swings and more about steady execution. Emotional freedom is what gives traders long-term survival. Anyone can get lucky for a week or even a few months. But staying in the market for years requires control. You must stay calm when others panic, remain patient when others rush, and trust your system even when doubt appears. This path isn't easy, but it's the only path that leads to consistent profits. When you reach this stage, trading changes. It no longer feels like gambling or emotional chaos. It feels like a structured business where decisions are logical, risks are controlled, and emotions stay in their proper place. That's when trading stops being chaos and starts becoming freedom. Not just financial freedom, but emotional freedom too. So now comes the real question. Are you still stuck on the roller coaster, letting emotions control every move? Or are you ready to step off and take control of your trading for good? Trading is often described as a battle with the market, but the real battle has always been inside you. Candlesticks don't care who you are. Spreads don't care about your feelings. Charts don't move just because you want them to. The market moves no matter what you hope for or fear. What separates traders who last from those who burn out is not better analysis or secret knowledge. It's emotional freedom in an environment designed to test self-control. The emotional roller coaster follows the same pattern for almost every trader. It starts with excitement. You fund your account, place your first trades, and when you win, you feel unstoppable. Then a loss comes, and it hits harder than expected. Instead of seeing it as normal, you take it personally. You question yourself, your strategy, and even trading itself. That's when the emotional cycle begins: fear, greed, hope, frustration, and despair. Some traders stay trapped in this ride forever. They jump from strategy to strategy, always searching for something that will remove pain. But no strategy can save you from your emotions. Freedom doesn't come from a perfect system. It comes from mastering your mind. One of the most damaging beliefs traders have is that results reflect personal worth. When they win, they feel smart. When they lose, they feel worthless. This attachment chains them to the ride, rising and falling with every candle. But winning traders know a trade says nothing about who you are. It only reflects probabilities playing out. A good trade can lose. A bad trade can win. The only thing that truly matters is whether you followed your rules. That's where real self-respect in trading comes from, not being right, but being disciplined. Most traders never find freedom because they fight reality. They expect the market to reward effort, to behave fairly, to give certainty where none exists. That resistance creates frustration. But when you accept that the market is random in the short term and driven by probabilities, the pressure lifts. You stop needing every trade to work. You let the process play out, knowing your edge shows itself over time. Professional traders think differently from beginners. They don't get overly excited after wins or crushed after losses. They stay steady because they see the long-term picture. Each trade is just one of thousands they will take. They accept emotions will come and go, but discipline must stay constant. That's why professionals don't chase losses or jump between random setups. Their freedom comes from perspective. To move toward emotional freedom, you must build habits that support discipline. Promising yourself to stay calm is not enough. You must design routines that keep you calm. A strong pre-market routine grounds you. Clear risk rules protect you when emotions spike. End-of-day reviews help you learn instead of obsess. These structures are not optional. They hold you steady when everything inside you wants to break the rules. Patience is another pillar of freedom. Impatience causes traders to force trades and overtrade for fast money. The market punishes rushing. Freedom comes when you stop craving instant results and trust consistency over time. As patience grows, desperation fades. And when desperation fades, the roller coaster loses its power. Humility is also essential. Many traders fail because they refuse to accept being wrong. They hold losing trades, add to bad positions, and let ego take control. Professionals accept losses quickly and move on. They don't need to win every trade. They just need to survive long enough for their edge to work. Emotional freedom isn't about removing fear or greed. It's about reducing their control. Fear will always whisper before you click buy or sell. Greed will always push you to stay longer. But you don't have to listen. When you can feel fear and still follow your plan, you are free. When greed screams and you still exit according to rules, emotions no longer control you. Losses also need to be reframed. Most traders see losses as failure. But if a loss followed your plan, it was actually a success. You did your job. When you see losses as part of your system instead of personal weakness, emotional pain fades. As this mindset grows, trading becomes calmer. The extreme highs and lows smooth out. Trading starts to feel routine, even boring, and that boredom is freedom. The market is no longer a storm dragging you around. It becomes something you navigate calmly with discipline. This is why long-term traders seem emotionless. Not because they don't feel, but because they respond differently. Without emotional freedom, you will keep repeating mistakes and burning accounts. With it, you gain consistency, balance, and control. So ask yourself one final question. Will you keep riding the roller coaster, letting emotions decide your future? Or will you step off for good and choose the freedom that comes with discipline? If you found this video helpful and want to continue mastering your trading mindset, make sure to like this video, subscribe for more insights, and share your thoughts in the comments below. I'd love to hear how you handle the emotional roller coaster and what strategies help you stay disciplined. Let's grow together as traders.